Okay, so today I'll show you a practical question which is taken from A-level accounting past papers. One of our students has requested to make a video on this topic, on this question. Okay, so before we start, let us have a look at the question on the screen. Muse is a sole trader and prepares her financial statements on 31st May each year. Okay, she depreciates her motor vehicles using the reducing balance method at a rate of 20% per annum. Okay, depreciation is charged monthly. Okay, Mew purchased a motor vehicle on 1st June 2013 for $152,000. Okay, on 1st March 2015, a new motor vehicle was purchased at a cost of $190,000. Okay, the old vehicle was part exchanged at a value of $84,000. Okay, the balance was settled via bank loan, repayable over 3 years. Okay, so this is our question. Now, what is our requirement? So here it is written that prepare the motor vehicle at cost account for the year ended 31st May 2015. Okay, so many information are given in this question. So this will be a bit complicated, but if you understand, your concept will be clear. You can prepare all types of depreciation account for any non-current asset. Okay, so first of all, we need to know the financial year. Okay, she prepares her financial statement on 31st May. Okay, it means that she starts her financial year on 1st June and she ends on 31st May. Okay, so financial year will be here 1st June to 31st May. Okay, so here we have 12 months. So this is the financial year. Okay, so before we start, let us have a look at the format here. So we have here 6 columns. On the debit side, we have date, detail, and dollar columns, and on the credit side, we have same date, detail, and dollar columns. These 3 columns are debit columns, and these 3 columns are credit columns. Okay, so now we have here 4 steps. We will complete this depreciation account following these 4 steps. Okay, so step 1, what is this? Opening balance. Okay, so first of all, we need to write opening balance. We need to write balance BD, means balance brought down. Okay, if it is new business, there will be no opening balance. If it is an old business, then there must be opening balance, and it will be written on the debit side here. Okay, so opening balance on the debit side. Why? Because we are doing motor vehicle account. Okay, so motor vehicle is an asset, and we know asset is a debit balance. Okay, that is the reason we will write opening balance on the debit side always. Don't forget. Okay, very good. So step 2, we have here all asset disposal. So if we see on the question we disposed any kind of asset, then we need to record. Okay, we need to write on the credit side here. Okay, so disposal of old vehicle or existing vehicle, whatever you call. So then we have here step 3, new asset purchase. If there is any new asset which is purchased for the year, for the financial year, then we need to record. Okay, we need to write on the debit side. Don't forget. Okay, so here purchase we have star. Why? Because after purchasing there are many payment terms. Okay, maybe after purchasing, business paid money in cash, maybe by check, by bank, or purchase on credit, or exchanged with the old vehicle. Okay, depends. So here whatever it is, we will write on the debit side. Then step 4 here, balance the ledger account. This account we need to balance. I'll show you how to balance it. Okay, let us start with step 1, opening balance. So on the question we have here opening balance. So first June 2013, she purchased a motor vehicle for $152,000. Okay, so in 13 there is no transaction. Okay, so we will start from 14. Okay, so 2014 1st June she purchased. So we are doing this account for the year 1st June 2014 to 31st May 2015. Okay, so opening balance, that means she had this motor vehicle since 2013, so it is an old business, so we will write here opening balance as balance VD. Okay, so let us write here first of all motor vehicle at cost account. Okay, so now we will write opening balance as balance PD. So we will start on 1st June 2014. Okay, so let us write year 2014 June 1st. So we will write here balance BD. Okay, so she purchased motor vehicle for $152,000. So we will write here $152,000. Okay, very good. Then we have some more information on the question. You purchased a motor vehicle on 1st March 2015. A new motor vehicle was purchased at a cost of $190. The old vehicle was part exchanged at a value of $84,000. So here on 1st March 2015, one more motor vehicle is purchased. Okay, but here payment terms are different. So after purchasing, she took some loan and old one is partly exchanged for this new motor vehicle. Okay, so now my question is, what about our old vehicle? Old vehicle are still there in the business? No. When she purchased new vehicle, she exchanged. Okay, she partly exchanged with her old vehicle. So that means old vehicle is gone. Old vehicle is no more in the business. Okay, so it is disposed. So now when it is disposed, the time she purchased her new vehicle on 1st March 2015. Okay, that time the old vehicle was disposed. Okay, so disposal of old vehicle. So when old asset is disposed, we need to write on the credit side. Why credit side? Because here motor vehicle account will be credited. Okay, and disposal of motor vehicle will be here debited. So motor vehicle will be here credited, so we will write on the credit side. So let us write here 2015 March 1st she disposed, so we will write here disposal of motor vehicle. Okay, so the cost price was $152,000. This full amount will be now disposed. Okay, so let us write here $152,000. Okay, so we record it. Now what to do? Now we need to record the purchase. Yeah, so when new asset is purchased, we will write on the debit side. Okay, why? Motor vehicle account to be debited and payment terms will be here credited. For example, cash, credit, bank, whatever. Okay, so we purchase. Now we will record on the debit side. Okay, so what is the date? It is same date, 2015 March 1st. So let us write here 2015 March 1st. Okay, so here she purchased new vehicle by $190, right? Okay, so from this $190, she exchanged her old vehicle for $84,000, right? And the rest amount she took loan for 3 years. So from this $190,000, this is the cost price. Okay, for new vehicle. So she exchanged her old motor vehicle for $84,000, right? So, and rest of the amount, how much rest amount? $106,000. This amount she took as a loan. Okay, and this amount was disposal value for old vehicle. Okay, so now we will write here first of all loan for 3 years. So let us write here loan and the value is here $106,000, and the rest $84,000 will be here disposal, right? So let us write here disposal of motor vehicle. So how much it is? $84,000. Okay. So what do you think? Complicated? No, not at all. Okay. So here I repeat, $106,000 was loan and $84,000 was the exchange value, okay, with her old vehicle. So now what to do? We need to balance it, okay, because we recorded all the purchase and asset related transaction, means motor vehicle related transaction, okay. So how to balance it? It is step 4. Balancing is quite simple, okay. You know, we need to check the larger column, the bigger column, the greater column. Which column is greater? So if we check, we see the debit column is greater, yeah, in value. So let us sum up the debit column first. So if we sum up, we find here $342,000, okay. So same amount we will take to the opposite side here. On the credit side, same level, $342,000, okay. Now $342,000 minus $152,000, how much? It is simple, $190,000, okay. So this is the closing balance for this motor vehicle, okay. So how to write closing balance? We write as balance CD. CD stands for balance carried down, okay. So what will be the date for balance CD? Always the closing date, okay. Closing date of the financial year. It is 31st May, okay. So let us write here 2015 May 31st, okay. Now we need to bring down the balance, okay. How to bring down? Come to the opposite side. Here on the debit side, right here below the total balance, BD means brought down. How much? Same amount, $190,000, okay. So what will be the date for balance BD? It will be the first day of next financial year, okay. So here financial year starts on 1st June and ends on 31st May 2015, yeah. That means new financial will be started on 1st June 2015. So let us write here 2015 June 1st, okay. So this is how you need to prepare motor vehicle at cost account, okay. This is simple if you understand. Clear, okay. I have some more videos on this depreciation account on my channel. You can check out.